conducting your account session. So before starting anything in accounts, I just wanted to know, do you have covered any topic until now? What you have already covered in accounts? Can you just give me an idea so that I can start accordingly? Starting
Sir,
with
you're
Zainab.
asking me?
Sir,
Okay.
Is Zainab?
sir,
Yeah.
um,
I'm assuming that you're already
accounting
going to school
equation.
and must have covered a, sorry.
I've covered till accounting equation. Asset includes and
You have
liabilities include, that much.
that much. Okay, all right. Laviba, what about you?
Sir, for me, it is like from the starting till we covered only the basics, like only the introduction
Okay, so the
explanation.
basic. Okay, so meaning of accounts and everything is clear.
Yes, little
That
bit.
is the introduction part of accounting.
Yes, sir.
All right. Okay. All right. So that's great. So, see, in today's class, we will be starting the accounts from the very beginning. I'll be teaching you from, you can say, we will be starting our entire concept from the zero. All right. So, but before starting anything, I just wanted to know, what do you already know about accounting? What do you understand by accounts? Anyone?
It,
Laviva,
it is
could you please tell me what do you understand? Yes.
it is something about computers, like not exactly computers, but something related to business, economics, and the society, I guess.
Hmm. All right.
Like
And
day
Zainab, do you
to
have any
day
idea
thing.
what is accounting? Day to day, sorry.
No, I was saying that day to
It's
day
about
things
nest
define.
and it's the process of, wow, nice.
Yes, Zainab, please continue.
Sir, it's accounting is like about business and in accounting we
Go on.
identify, measure, record and
Okay, so
communicate
you all,
these things.
okay, that's great. All right. So all right, no problem. Let's just let me explain to you what is actually accounting. We will go step by step. We will first of all talk about the meaning of accounts. Then we will be discussing in today's session. We will discuss about the various steps involved in the process of accounting. Then we will try to cover few basic terminologies like the meaning of the assets and the other things. So starting with the first things, first of all, we'll talk about the meaning of the account. So see, the very formal definition of the accounts is what? Accounting is an art of recording the financial transactions of a business in a systematic manner. What is accounting? Accounting is an art of recording the financial transactions in a systematic manner. Got it? This is clear to you? Accounting is what? Accounting is an art. Number one. Art of what? It is the art of recording the financial transactions of a business. Now the question arises, so why are we required to record the financial transactions of a business? Why are we required to record the financial transactions of a business? Could any one of you please tell me? Like I told
To
you
keep
that accounting is an art of recording the financial transactions, but the question arises, why there is a need to record the transactions?
teacher, so sorry, sir, to this like keep data of what we are doing and what we are not.
Okay, so just to maintain a record regarding the things we are doing and what we are not doing. All right. So see, let me explain the entire concept by a small example. Let me give a small example to make it more clear. See, what I told you that accounting is an art. All right, let me give you an example and make it more clear to you. Just a minute. Give me a moment. Let me adjust my camera a little. All right. Okay, so first of all, we'll start with the meaning of accounts. Account. So as I told you, accounting is what? Accounting is an art of recording. All right. Accounting is an art of recording what? Accounting is an art of recording the financial transactions. All right, sir. And that too in a systematic manner. Accounting is an art of recording the number one financial transaction in what manner? In a systematic manner. All right. So now the question arises, why are we required to maintain the record? Why are we required to record the financial transaction in a systematic manner? So let me give an example to make it more clear to you. Let me assume that a person, let's suppose Mr. There's one person, Mr. Adil. Mr. Adil is starting a new business. Let's suppose Mr. Adil is starting a new business. Sorry. Starting a new business. And let's suppose the date on which he is starting his new business is on 1st of April, 1st of April 2022. All right. So once he start his business, he will have to incur various kind of expenses, and he will be earning various types of income. So first of all, when he will start his business, he will have to invest certain amount of capital. Is that correct? He will be investing certain amount of capital. Let's suppose he have invested 5 lakhs in the beginning of the business, 5 lakh as capital at the beginning, as on 1st of April. Now after starting the business, he will require various resources. Like for example, he will require laborers and employees to work for him. He will hire employees and also hire laborers. He will have to pay salary and wages to the laborers. Is that correct? After that, he may also require to take a place uh, on rent to operate his business. Let's suppose he have taken a place on rent building, for which he will be paying rent. All right. And during the process of business, during the business or during the operations of business, he will be let's suppose he will be purchasing some raw material from some party. Purchasing raw material, he will be producing goods, so he will be spending some amount on production of the goods. Yes or no? Producing goods. This is clear now, everyone?
Yes, sir.
Yeah. Okay. Other than producing good, purchasing raw material, building, rent, salary, wages, all these things, he may be there might be a possibility that he has to borrow certain funds from some third party. Maybe he will be borrowing certain amount from the bank or by some other person, you can say. And he may be selling goods during the operation of the business, so he will be earning certain amount of revenue by selling goods to the customers. And there are many other activities that he will be conducting throughout during the operations of the business throughout the year. Let's suppose uh, now the year ends. Let's suppose after the period of 1 year, 31st of March 2023. Let's suppose after 1 year period, during the 1 year period, he have carried out all these activities: hired labor, hired employees, paid salary, wages, other operational expenses, purchase of raw materials, sale of goods, buying of goods. All these things have taken place. Now 1 year have passed. Now at the end of 1 year, Mr. Adil must be interested in knowing certain thing about the business. He is, after the end of the year, at the end of 1 year period, he is interested in knowing, first of all, the first thing that he want to know, being a owner of the business, he is interested in knowing the position of the business. Position. So what do you mean by position of business? Position as in He wants to know whether the firm is generating whether the business is generating sufficient amount of profit or not. He want to have a idea. He wanted to have an idea about the profit and loss that he have generated during the year. So being the owner of the business, he is interested in knowing the amount of profit or loss that business have generated. Other than Mr. Adil, let's suppose the other for example, investors, those who are interested in investing into the business of Mr. Adil, the investor will also be interested in knowing the position of the business, right? For example, investor will try to evaluate whether Mr. Adil's business is good enough so that investor may invest into his business or not. So in order to decide whether investors should invest into the business or not, to take the better investment decision, investors should have the idea about certain things, like the investor must be interested in knowing the profit and loss. Other than profit and loss, the investors may also be interested in knowing the cash flow position of the business, whether firm is generating sufficient amount of cash flow or not. Similarly, employees of the business may also be interested, because employees at the end of the year, employees will be will demand bonus. So how much bonus they will be entitled for, or how much commission employees will get, it depends upon the performance of the business. Is that correct? So everybody have their different concerns regarding the business. If the being the owner of the business, Mr. Adil is interested in knowing the profitability of the business. Being the investor is interested in knowing the financial position or the cash flow status of the business. Being the employees will be interested in knowing whether the business will be, whether the company will be paying them a sufficient amount of bonus or commission or not. Similarly, government will also be interested. Government will be interested in determining the tax liability of the business. Government will be interested in knowing the tax liability of the business. Got it, everyone? So the thing is that at the end of the year, how Mr. Adil or the owner or the investor or the government will be able to evaluate the position of the business? How owner, investor, employee, government, or any other stakeholder, like for example, any other stakeholder is interested in knowing any other thing about the business, how will they be able to know the things about the business? Only if the business have maintained a proper accounts of everything they have conducted throughout the year. Is it clear? So accounting is important. Why accounting is important? Because at the end of the year, owners, investors, employee have to take various kind of decisions. Investors have to decide whether they should make the investment into the business or not. Owner have to decide whether he should continue doing this business or not, whether he should discontinue the business or he should keep on doing this business. So all these decisions depends upon the financial records, and therefore if we do not make these records, if we do not maintain the financial records of the transaction, then how are we going to decide how much profit have generated, how much profit business have generated, whether investors should make the investment or not, whether or not employees will be getting bonus or commission, whether or not government will be receiving tax from the business. So all these decisions can be taken only if financial records are maintained by the business. Got it? Is this clear to you?
Yes, sir.
Labiba?
Yes, sir.
Yes, sir.
Yeah, okay. So do you understand the importance of the accounting? Accounting, what I told you, accounting is an art of recording the financial transaction. Now the question arises, why do we need to record the financial transaction? Because because throughout the year various transactions are done by the business, and all these transactions collectively impact the performance of the business, impact the status of the business, impact the profitability and loss of the business. So unless and until we record the financial transaction, we won't be able to evaluate the profitability, the losses, the investment decision. All these things depend upon whether we have maintained the proper record of financial transactions or not. Therefore, accounting come into picture. Their accounting plays an important role. So therefore, we record the financial transaction in a systematic manner, so that when at the end of the year we want to take a decision whether we should make further investment into the business, whether firm have generated the profit or firm have generated the loss, we would be able to take better decision. We would be able to evaluate our business in a proper manner if we have maintained financial transaction in a systematic manner. Got it? So accounting is an art of recording the financial transaction in a systematic manner. Why do we require to record the financial transaction in a systematic manner? Because as we know that there are various transactions that are carried out in the business during the period of 1 year, and all these transactions collectively impact the position of a business, right? And accounting helps in determining the position of the business at the end of the year, and it also enables us to evaluate the profit and losses incurred by the business during the accounting period. Accounting period basically means period of 1 year. So during 1 year period, whether firm have generated sufficient amount of profit or not, whether there is sufficient inflow of cash or not, whether firm is in a position that investors can invest in that business or not. So all these decisions can only be taken only if financial transactions are properly recorded, and therefore accounting is required. I hope this is clear to you, Zainab and Labiba.
Yes,
Yes,
sir.
sir.
All right. So, Labiba and Zainab, I just want you to note the definition of the accounting first of all. Please write this down. Let me know as soon as you are done, and then we will move to the next slide. Please put
Okay,
the
sir.
heading on your notebook. We will today. This is the first chapter, and in the first chapter we will be considering the very basic component of the accounting. So you can name the chapter as Introduction of the Accounting. Introduction of Accounting. And the first point that you are going to write in your notebook is meaning of accounting. So accounting in this simplified manner, we can simply say that accounting is an art of recording the transaction of a business in a systematic manner. Why are we required to record the transaction? So that at the end of the year, when we need to take various decisions, we would be in a better position to take such decisions if we have maintained a proper record of the financial transactions. If you do not have the record of the financial transaction, we won't be able to take decisions regarding take various decisions regarding the business.
Sir, I finished writing this.
Okay, all right. Zainab, please confirm if you're also done with this. Oh, sorry.
Done, sir.
All right. Please note this down as well. Accounting helps in determining the position of the business at the end of the year. Also enable us to evaluate the profit and losses incurred by the business during the accounting period.
Sir, finished.
All right.
Yes, sir.
Done. Both of you. Zainab also.
Yes, sir.
Okay. All right. So since the meaning of the accounting is clear to both of you, now we can move to the next point. Now we will talk about the various steps involved in the process of accounting. So what are the various steps, or you can also call it process of accounting. You can put this is the next heading. Put this as next heading on your notebook, process of accounting. So until now we understood that accounting is an art of recording the financial transaction, but there are certain there is a process of recording such transactions. There are steps, there is defined steps which need to be followed in order to record the financial transaction. So what are we going to do? We will be discussing those steps in detail. So first thing, the first step in the process of accounting, by the process of accounting, I basically mean when we want to record the financial transaction, the first thing that we need to do is identifying the financial transaction and events. So this is the first step in the process of account. Let me explain this point a little. See, by identification, what do I actually mean? Just see, identification, this is the first step. Under this step, what do? We identify the transaction. Identifying the transactions. See, so this is the first step. Sir, what do we do in the first step? In this step, we just try to determine which transaction is of importance from the accounting point of view. See, pay attention, try to understand. Not every transactions are not recorded in the accounting. Only those transactions are recorded in the accounting which are in terms of money. Only monetary transaction, only financial transactions, only those transactions which are in financial, which are of financial nature, only those transactions are recorded in the books of account, or you can say during the process of accounting. So the first thing that we need to do is to identify which transaction should be recorded in the account and which should not be recorded. So that means the first step is to bifurcate. We need to understand, we need to divide or bifurcate those items which are not to be recorded in the accounting and which are to be recorded in the accounting. For example, let me give you an example. Let's suppose Mr. Like we took the example of Mr. Adil. Let's suppose Mr. Adil, for some business purpose, he purchased some raw material. From one of the supplier, and the value of the raw material that he had purchased is rupees 50,000. Got it? So tell me, both of you, do you think this transaction is important from accounting point of view? Do you think this is a financial transaction? Any transaction
Yes.
is a financial transaction if it involves payment of money or receipt of money. If income is if there is a inflow and outflow of money, it is considered as a financial transaction. So do you think this transaction is a financial transaction? It should be recorded in the financial accounting.
Yes.
Yes.
No, sir. Yes.
No. Okay. Someone said no. Anyone is saying no?
Yes, sir.
All
I
right.
said.
Okay. Now it is clear to you, na? See,
Yes, sir.
purchase of raw material is a financial transaction since there is an outflow of money from Adil to some third party, some supplier. Similarly, Mr. Adil, being the owner of the business, he have borrowed certain amount from the bank. Let's suppose from bank borrowed. Let's suppose 20,000 from bank. So is this also required to be recorded in the financial? Is this also required considered to be a financial transaction? And is this also required to be recorded in the financial accounts? Answer is yes. Since it involves money, there is an inflow of money. We need to record this in the financial transaction. We need to record it in the accounts. So the first thing that we need to do is identify which transaction is to be recorded, which are not to be recorded. For example, let's suppose labor or employees have made a strike. There are certain demands of the employees, and because such demands are not fulfilled by the employer, employees have gone on strike. Do you think this event is of significance from the accounting point of view? Does it involve any monetary payment, inflow or outflow of money? Do you think it is a financial nature transaction? Answer is no.
No.
If employee is going on a strike, this is not a financial transaction. This is an event. Obviously, it is an event, but it is not important from accounting point of view. This event cannot be recorded in the account since it does not involve any kind of payment, any kind of receipt. No receipt, no income inflow, no payment have been made. So just because this is an event and because it is not affecting the books of account in any way, but because it is not affecting the money of the business in any manner, so therefore we are not required to record this in the books of account. Got it. Similarly, someone filed a court case against the business. Someone filed court case against business. Do you think this is an important event from the business point of view? Yes, this is an important event. Someone is filing court
But
case
it
against the
should
business.
not be
This is
recorded.
an event, but this is not. But this is not a financial event. This is not a financial transaction. So we cannot record such transaction. Only those transactions can be recorded which are of financial importance, which involve financial, which involves inflow or outflow of money. Is it clear?
Sir, I have a doubt.
Yeah, please ask.
So, like when the person he files the case, the like on the business, the obviously the business it will suffer little bit loss, right?
Mm-hmm.
When the case is filed. So
Mm-hmm.
somehow, like not directly, but indirectly, it is kind of
Yeah, good.
like
That is a very good question, Labibhai. Labibhai is saying that if somebody have filed a court case against the business, it is not directly affecting the finance of the business. It is not directly related with the financial transactions of a business, but it is somehow it will indirectly affect the sales of the business or the revenue of the business indirectly. Maybe because the reputation of the business may be lost in the market, and due to which there will be a reduction in the revenue.
loss.
That is a different scenario. Obviously this is going to affect the overall revenue of the business in the future, but right now this event is not directly related to finance,
Accounting. Okay.
and therefore that because it is not directly related to finance, it cannot be considered as a financial transaction, financial event. And because it is not a financial event, we won't be able to record this into the financial accounting. that is
Okay, sir.
that is why I'm saying that it cannot be recorded in the financial account, since because it does not involve any kind of monetary payment. So the first thing that accounting require is to evaluate whether which event or transaction should be recorded in the books of account and which are not to be recorded in the books of account. And just a minute. So therefore we can explain it like this. uh, Identification is what? Identification is the first step in the process of accounting, wherein transaction and events are to be recorded, wherein we are required to identify which transactions and events are to be recorded. And to be very precise, we can say accounting record only those transactions which are of financial nature. Transactions which are not related to finance generally not recorded in the books of account. Got it, everyone? So put this heading, process of accounting, write down the first step, identifying the financial transaction and event. And just write this part in your notebook. Accounting record only those transactions which are of financial nature. I hope this is clear. You are not required to write this down. Just for the time being, avoid this point.
Okay, sir.
Just write this.
Sir, finished.
Done, sir.
Done. Okay. Okay. Moving on to the next step. So the first thing was to identify the transaction or event which are of financial significance. Next thing is to measure the identified transaction. So it is, we are done with the identifying part. Like we are very sure that sales is to be recorded, purchases are to be recorded, payment, if we are borrowing certain fund from some party, that to be recorded. Now the question arises, such item need to be measured, and you must use a common denomination to measure all the transaction. Like if you are selling goods, for example, if you are selling goods, you have sales goods for rupees 50,000. So the first thing is to identify that sales is to be recorded in the books of account, number one. And then we need to measure the value of the sales. So we have to determine how much sales have taken place. For example, if the goods, if 50,000 sales have been taken place, so we need to record this in the books of account. So first thing is to identify the transaction. Second is to measure the value of the transaction.
Measure.
And measurement should be in common denomination. That means all the transactions should be measured in common currency units. For example, if we have sold goods for rupees 50,000, and let's suppose if we have purchased goods, and let's assume for the time being that we have purchased goods from America, from UK, or from any other country, and uh, we have purchased goods for $5,000. So you know what, you cannot record the transaction, one transaction in terms of rupee and one transaction in terms of dollar. Either you need to decide the one denomination in which you want to record the transaction. Firstly, you need to measure the transaction. Number one, you need to record such transaction in the common denomination. For example, if you are recording the value of the sales in terms of rupee in the books of account, then you need to record the value of the purchase in the books of account in terms of rupee only. You cannot record one item in terms of rupee, the other item in terms of dollar, the other items in terms of dinar, real, yen, pound. No. The first thing is to identify the transaction, then measure the transaction in common denomination, common currency unit. Got it? So the first thing
Yeah, I
is
have one
measurement.
doubt.
Then yes, yeah, please.
Sir, is it like we had 3 or 4 transactions? One is in dirham, while the other one is in dinar, rupees, and then dollar. Okay, so we have to pick one. We have to like divide. I mean, do everything in the same currency, right?
Yeah.
So is it
Firstly, yeah.
important for us to pick only the dollar or the higher transaction in which we
No,
did
see,
something?
it completely depends upon you, Labiba. It completely depends on what basis you want to maintain your account. Like for example, if I'm in India, so most of my investors are Indian. Most of the consumers, most of the seller, employees, buyer, the all the stakeholder, most of the stakeholder of the business are Indians, right? So obviously they want to look at the accounts. When they want to look at the accounts, they want to have all the transactions recorded in terms of rupee, because that will give them a better idea about the business. If I start recording all the transaction in terms of dinar, it would be extremely difficult for them to interpret the accounts, whether the business is generating sufficient amount of revenue or not. It would be difficult for them to interpret it. So it is always advised to record, to maintain the account in the local denomination currency, local currency unit. Like for example, if I'm in India, I will be recording the transaction in the rupee only. If someone is in America or UK, they will be maintaining the books of account in terms of pound or the dollars or real or dinar, or depending upon the local currency we generally maintain the books of account. Got it? Is this clear to you now?
Yes, sir.
Okay. So the second point here basically means accounting measures the business transaction in terms of common measurement unit, that is currency of that country, generally currency, local currency of that country. However, we can maintain the record in terms of in any denomination also. It completely depends upon our choice, but it is always advised that one should record the transaction in the local currency unit, so that it is more easier for him as well as the stakeholder and the government to interpret the books of account in a better manner. All right, please note this down. Put this. This is the second step: measurement of the identified transaction. Let me know once you are done.
Sir, I finished, but I have one more doubt.
Yes, Laviva, please ask.
Okay, sir, it's okay. It is like I live in Gulf, so like okay, it is like you're talking about the holders and everything. Like most of the people in the business, they are Indian and you live in India. So it is better for you to like, identify the transaction in rupees. As it will be easier for everybody to understand. So it is like an Indian is living in the Gulf in an Arab country or anywhere else. And like most of his like he or she, that person has a business in another country, okay, and the people of that country obviously like their holders and everything, some of them are Indian but some of them are non-Indian, some of them are Arab, some of them are like from different countries, okay. So the owner, he or she will take like you know dollar or euro something which will like international, right? So that it would be easier for everybody to understand, or is it like it is important for them to take the currency of the country itself? Like
No, no,
if they do
that is
it
not. This is
international.
not. This is not. See, what that is what I was telling you, that measuring the transaction in the local currency is not mandatory. It is the choice of the person who is maintaining the books of account or the owner of the business, in what terms or in what denomination they want to record the transaction. If they are of opinion that it would be better if we express all the financial transaction in the international monetary unit, then it is still okay. The thing is that it should be easier to interpret for most of the stakeholders. It completely
Yes, sir.
depends
But
upon the choice.
yeah, but for okay, for that person, the businessman, the owner, for like he has people of all countries. Some are Indian, some are Arabi, some are from there, some are like etc country. For them, it will be easier. Like if he directly gives a dollar so that they can convert it later, it would
Yeah,
be like
obviously
easier
in
for
that case it will be
everybody to
easier for
understand.
him to record the transaction in terms of dollar. See,
Yeah.
someone is going to, obviously someone is going to suffer with the conversion of the transaction, obviously. But since the records are maintained in terms of dollar, and if somebody are not familiar with the dollars, then he will definitely have to convert the dollar transaction in terms of the local currency.
Okay, sir.
Got it?
Yes, sir.
Moving on to the third step. Third step is to finally record the transaction. We are done with the two step. Identify the transaction which are to be recorded, which are not to be recorded. Second is measure those transactions which needed to be recorded. Then third
Common.
thing, finally, yeah, obviously, measure the transaction in common denomination, and then finally record the transaction. Now here comes the important point. See, whenever you record the transaction for the very first time, this is the very first time we are going to record the transaction. So there is a special book where we record the transaction for the very first time. Whenever you record the transaction for the very first time, you record this in the book of original entry. There is a specific name of that book where we record the transaction for the first time. That is called book of original entry. It is also known as journal. So we need to record the transaction in the journal. Whenever, like for example, if I made a sales and I need to record it somewhere, so the first place where I'll be recording this transaction is the journal. Journal is a book, or you can say it is a statement wherein all the transaction to be recorded for the first time, and then after that bifurcation and division, and depending upon the nature of transaction, the characteristic, we divide and distribute it in the other way. So I'll be explaining that in the fourth step. So the first thing is identifying, then record then measurement, and then finally recording it. And where do we record the transaction for the first time? In the journal. Got it? I hope this is clear to you.
Okay, sir. So basically, journal is like the data or the thing where where we're going to record all the transactions, and we will keep it for 1 year.
Yes, like you can presume for the time being that it is a kind of file, it is a document. All the transaction that
Okay.
is being taking place, we will first of all record all the transaction in one book, which will be considered as journal. And after recording there, we will then further distribute, and then later on write into the other books. But when the first time we need to record it, we will be recording it in the journals.
Okay, sir.
Please note this down.
Sir, finished.
Yeah, sir, done.
Done. Okay. Moving on to the fourth point. Finally, after identification, then we measure the transaction, then we record the transaction. But like I said, all the transactions are recorded at only one place, right? Like if we have, let me show you. There are different type of transactions are done in our business. Like for example, if we have bought goods, if we have bought goods on cash, this will be recorded in the journal. If we bought good on credit, this will also be recorded in the journal. If like for example, if we have made a sales could also be cash sales or credit sale, this would have been recorded in the journal also. Like other than sales or sale of goods and the purchase of goods, we have bought a building, or we have made a payment for rent, or we have made a payment of salary, or we have received interest from the bank, or any other transaction. All these transactions are recorded at one place in the journal. But now at the end of the year, or at any point during the operation of the business, we just wanted to know the value of the sales, how much sales we have made, how much purchases we have made. We wanted to know very specific information about all the transactions that have taken place. We just wanted to know the value of the purchases, we just wanted to know the value of the sales, we just wanted to know the value of the buildings that we own, or the furnitures that business own, or the amount of rent that business has paid. So don't you think it will extremely get difficult to find out the value amount of sales that have taken place in the book of the journal, when you will, since you have recorded all the transaction at one place. Now now from all those transactions that you have already recorded in the journal, you wanted to just find out the value of the sales. Now it will be extremely difficult for you to find out all the value of the sales by looking at the book of the journal, since journal contains so many transactions na? And now you just wanted to know the value of the sales that have taken place during the period of, let's suppose for the period of last 6 months. So you have to go through the entire journal, and it will get extremely difficult for you. And similarly, if you just wanted to know the value of the purchases for last 1 year, or let's suppose for example last 2 months, 3 months, 6 months, will you be comfortable looking at the entire journal, finding out the value of the purchases, on what date, how much amount of good we have purchased, and on what date how much goods have been sold? It will be extremely difficult. So for that purpose, what do we do? After recording it one place, after recording it at one place, that is in the journal, we also classify the transactions. We classify the transaction, like we prepare a separate ledger for recording all the sales related transaction. We prepare special ledger, you can call it a special kind of book, that contains all the information regarding the purchases. A special ledger will be prepared for recording all the transaction relating to furnitures. So this is what do we call? We call it classification of the transaction. Depending upon the nature or the item of transaction, we classify the transaction by preparing different ledgers. So the first time, whenever transactions are to be recorded, it will be recorded in the journal. And after recording there in the journal, we prepare a separate book, separate account for separate different kind of transaction, depending upon the nature and item. If we have made a sales, then we will open a separate book, or you can call it separate account, which will be considered as a sales account or the sales ledger, so that it will be easier for us to find out the exact value of sales that have taken place. Instead of going through the entire journal, we can just look at the sales book, and we will have a better idea how much sales we have made during the year. Similarly, if we have made purchases during the year, it would be extremely difficult to look at the journals, since so many transactions are there. Sales transaction, purchase transaction, furniture, building, rent, salary, wages, everything is there. What we have done, we just classify the transaction by the name of purchase ledger. There you will be able to find out all the transaction relating to purchases. So this step is called classifying the financial transactions. I hope this is clear to you.
Sir, this is confusing in the ending part. I'm not able to understand.
Okay, Zainab, what about you? Is this clear to you?
Yes, sir.
Sir, from the
See,
part where we have to make different ledger, you said that part is confusing.
what I was saying is that, see, uh, what I told you, that whenever transactions have taken place, we record the transaction, all the transaction at one place, right? But let's suppose I just wanted to track the value of the sales, how much sales that business have sales business have made during the last 3 months. So how am I going to evaluate the value of the sales? How am I going to find out the value of the sales? If I just prepared journal book, I'll have to go through all the entries that I have made on different date. All the transactions I'll have to individually look at and find out the value of the sales. Don't you
So,
think it will
sir,
be?
it is like we will make different journal, different for every is this thing, for
Yeah,
building, for
we
sales,
will make different books for recording different type of transaction.
so
After
that it
recording
will
it in
be
the
easy
journal,
for us.
after recording it
So,
in the journal, sorry.
okay, no. So I was just saying, so it will be easy for us to like when after we look at it to track it or something, it will be easy for us to know. So we will basically record everything in a journal, but in a different one, so that
Yeah, you can,
like
for the
it
time,
will.
you can call it that way. We prepare, but this time you won't be calling it a journal. Journal is a book where we record the transaction for the first time, and then any other book you open for recording different kind of transaction, that will be considered as the ledger.
Okay.
Got it? Okay. So
Okay, sir.
journal is the book of first entry, and then in order to classify the transaction depending upon the nature, item, and transaction, we need to prepare ledgers. I hope this is clear this time.
Yes, sir.
Okay. Done with writing?
No, sir,
Yes,
I'm
sir.
writing.
So 4 steps we have covered until now. First step was identifying the transaction which are to be recorded and which should not be recorded. Once identification is done, then we measure the value in the common currency, local currency unit, or the common denomination, and then we record it in the books of account for the first time in the journal. And then after recording, then we classify it into different accounts by opening different account, that is called ledger. And then after classification, we come to the step number 5. Step number 5 is summarizing the financial transaction. See, summarizing, basically the purpose of summarizing is basically this involve presenting the classified data in a manner that is more understandable and useful for internal as well as external users. So earlier, before summarizing, we did the recording where we prepared the journal entry, we made the journal, and after that we have made the ledger, and depending upon the number of items, there will be so many ledgers. So but let's suppose that if I wanted to have an idea about the business, how our business is performing, do I need to check all the ledgers? Do I need to go through the sales account, purchase account, and then the furniture account, and every other account that have been made by the business? Answer is no. That will be extremely hectic. I cannot go through the entire journal. I cannot go through the entire ledger. Obviously, ledger is much simplified since it contains similar transaction at one place. But I'll have to, in order to understand the position of the business, I'll have to go through the entire ledger. It will be extremely difficult. So just to summarize the ledger also, we have made the we prepared 3 different accounts. which is called trial balance, trading and profit and loss account, and the balance sheet. So we'll come to that later. First of all, let's just understand the meaning and the purpose of the summarizing the financial transaction. Summarizing basically means presenting the classified data. Classified data basically means the ledgers that we have made, presenting all those data in a more understandable manner so that it can be useful for the internal basically mean the employee, the owner, or the immediate stakeholder of the business. And it can also be useful for the external users, like the investor who is interested in investing into the business, like for the government. So government and investors and all the creditor and the outsider cannot go through the journal, cannot go through the entire ledger. So to make them more understandable, to make it more clear how business is performing, what do? We summarize all the financial transactions, but just by preparing three accounts, three statement, you can call it for the time being. We prepare three statements just to summarize all the financial transactions, to give it a precise view of the business. And what are those statements? These are trial balance, the trading and the profit and loss account, and finally the balance sheet. These statements are prepared to summarize the entire financial transaction so that it can be easily understandable for the internal as well as the external users. Got it? I hope this is clear, both of you.
So it is a bit confusing, but like everything is similar.
Everything is sounding similar. Okay.
Yes.
So as we proceed, things get clearer. Don't worry. But for the time, I'll explain the entire thing one more time. I'll try to eliminate the confusion. But for the timing, just note this down, and also let me know when you are done.
Sir, I finished.
Done, sir.
Done. Done. Moving on to the next point. Then finally, this is the second last step in the process of accounting. This is analysis and interpretation of the data we have prepared, or the various accounts that we have made. So whatever the accounts we have made, on the basis of that, we will be able to analyze the performance of the business. Now, we will be able to do the meaningful assessment of the financial performance of the business. So this is, you can call it, this is not exactly the process of accounting. This is why we were doing the accounting actually. Firstly, we identified, then we measured, then we recorded, then we classified, and then we have summarized the entire financial transaction. And the purpose, why were we preparing the, why were we recording all the financial transaction? Just to make a meaningful assessment regarding the performance of the business, right? So this, you can call it the sixth step in the process of accounting, wherein we analyze the performance of the business based on the summarized financial transaction, based on the trial balance, balance sheet, and profit and loss account we have made in this fifth step. On the basis of that, we will be able to analyze the performance of the business, and based on that, we will be able to interpret whether the business is doing good or doing bad, whether we should keep on doing the business in the future as well, or whether we should discontinue this business. So this is what the sixth step basically means: analysis and interpretation of the business. I hope this is clear. Please note this down if it is clear. Any doubt, please let me know. Zainab and Ladiva.
Okay, sir.
No, sir.
Sir, I finished writing, but this one is also confusing for me.
Done, sir.
I'm sorry, I was on mute. Yeah, Laviva, sorry. Yeah, what is the confusion?
Sir, I'm not able to understand this part, and the previous one, the process leads to the preparation of that 3 points.
All right, so just a minute, give me a moment. Let me explain the entire thing one more time. So you remember all the steps that we need to follow now in the process of accounting. First thing that is required to be done is, tell me,
Identifying
identifying the transaction, which should be recorded and which should not be recorded. Identify. After identification is done, then we move to the second point, which is measuring the transaction that need to be recorded. And after measurement is done also, then we record it for the first time in the books of account, which is in which book we record the transaction for the first time?
journal.
Journal. So we need to do the journal entry. Journals. And after journal is done, we move to the next step, which is step number 4, is now this is called classification, classifying the transaction by opening different accounts. Classifying transactions. And for classifying the transaction, what do? We prepare different ledgers. Ledgers. Got it? And see what happens now, like I told you that since so many transactions are taking place in a
No, sir, I
business on a
understood
regular
this
basis.
one.
Sorry.
I understood this one. I'm having doubt in the step 5.
Yeah, I'm coming to that, Lavika.
Sorry,
See,
sir.
so what I was saying that in this process we need to open so many accounts. Like we need to open sales account, we need to open purchase account, we need to open the furniture account, we need to open the capital account, we need to open the sorry, the expense related account, the receipt related account. There are numerous number of accounts. All right. Now, for example, if if somebody want to have an idea about whether how a business is doing, whether business is generating sufficient amount of profit or sufficient amount of cash or not, basically this is a, let's suppose that he's an investor, he want to have an idea about how business is performing. So what do? How can we make him understand that whether business is doing good or bad? Can we invite him to check all the accounts of the business? Can we tell him to, okay, go through the sales account, purchase account, this is the expense account of the business, this is the furniture account, this is the capital account, this is the asset account? This person is not going to understand all those things. This person won't be able to interpret all those things, and he cannot go through all different types of account. There are numerous number of accounts, maybe 20, 30, 50, 100, depending upon the size of business. There are so many accounts needed to be open. So being the investor, what he is interested in knowing, he will be interested in understanding. Basically he is asking us to give him a summarized information about the business, where he can just go through the particular 2-3 accounts and he can have a idea about the business. So for that purpose, what do? We come to the step number 5. We just simplify all the transaction, and just to simplify all the to summarize all the financial transaction, we prepare only 3 accounts. What are those? Number 1 is trial balance. We prepare trial balance. You have no idea what is trial balance until now. Just keep that in mind. It is a kind of statement. Then we prepare profit and loss account, and sometimes the trading account as well. And we also prepare the balance sheet. These 3 accounts will be sufficient enough to give him an overview, about the performance of the business. Got it? So therefore we come to the step number 5, where we summarize all the financial transaction. Instead of offering him that go through the entire ledger and journal, it will be extremely difficult for such an investor to go through the entire books of account. Instead, we just offer him summarized financial transactions, in the format of the trial balance, profit and loss account, trial trading account, and the balance sheet. This is it. I hope this is clear this time.
Yes, sir.
Got it, Laviva?
Yes, sir.
Okay. Moving on to step number 6. Step 6 was to, now finally he will be doing after getting the trial balance, profit and loss account, trading, and balance sheet. Now he will be analyzing and interpreting the performance of the business. Analysis and interpretation is the 6th step. Got it? I hope this is also clear. And
So
finally,
this one,
yes, please tell me.
no, I have a little bit doubt in the sixth one also. Can you explain that one?
What is your doubt? Please tell me.
The sixth one, right? The financial data is analyzed and interrupted so that the
See,
users of
okay, let's suppose we have prepared the summarized books of account. We have made the trial balance, profit and loss account, trading balance, and trading account, and the balance sheet, and we gave it to the, let's suppose we gave it to the investor, or let's suppose we offered this to, we presented it in front of the owner of the business or to some other person. So what are they going to do after getting these trial balance, profit and loss account, trading balance? Since we have made it to summarize all the financial transactions now. So what he is going to do, he is going to analyze all the transaction. He is going to analyze the performance of the business depending upon the data we have given to him in the format of the P&L, balance sheet, and the trial balance. By looking at the trial balance, balance sheet, and profit and loss account, he will be able to evaluate whether or not business is performing as per expectation. Whether business is doing good or bad, he will be able to analyze that, and he will be able to interpret that as well. So that this is the 6 steps: analysis and interpretation of the performance of the business based on the trial balance and profit and loss account of the balance sheet that the business have made. Got it? Is this clear now?
yes.
Okay. Now finally, the last step. Last step is communication. See, sometimes the books of account that we have made need to be communicated to some stakeholder. Let's suppose one of the stakeholder, let's suppose for the timing, I'm preparing the books of account in India. I have made the summarized financial transaction, the trial balance, the P&L, and the balance sheet. Now one of the investor who is interested in investing into my business, he lives abroad and he want those books of account to be shown to him. He want to have a look at the summarized financial transaction. He want to have a look at the balance sheet of the business. We want to have a look at the profit and loss account. So here comes the 7th step. We need to communicate everything that we have made to him. So communication is the last step in the process of accounting. Communicating whatever we have made, communicating it to the stakeholders or any person who is interested in knowing the position of the business. Any person who is interested in knowing the position of the business, we can communicate the books of account, we can communicate the financial transaction to such person. So this is the 7th step in the process of accounting. See, let me show you. Communication. Finally, accounting involves communicating the financial statement to its users, and financial statement should be provided in time to user so that user can take decisions at the appropriate time. Got it? Is this clear, Zainab, Labiba?
Yes, sir.
Yes, sir.
Okay, fine. So see, until now we discussed 2 things. Number one was the meaning of the account, wherein I've told you that accounting is what? Accounting is an art. Art of what? Art of recording the financial transaction. Financial transaction in what manner? In the systematic manner. Why do we need to record sorry, why do we need to record the financial transaction in a systematic manner? Because at the end of the year, when we will be in a position, when we want to evaluate the performance of the business, how are we going to evaluate whether business is doing good or bad if we haven't made any financial transaction record, we haven't recorded the financial transaction. So therefore, we need to record the financial transaction in a systematic manner so that we can take better decision at a proper time. Now, after that, we covered the various steps involved in the process of accounting. So I've told you that there are 7 steps which is involved in the process of accounting, starting with the identification, then measurement, then recording, then classifying, then after classifying, we summarize the financial transaction. After summarizing, we analyze and interpret the financial transaction. And after interpretation and analysis, we communicate it to the whoever who is interested in knowing the financial position, like for example, the stakeholder or any other person who is interested. I hope all these points are clear to you, Zainab.
Yes, sir.
Yes, sir.
All right. Moving on to the asset. Since we are already out of time, it's 9:15 already. So Labiba and Zainab, we will continue from this point onward in the next session. If you have any doubt, Labiba and Zainab, you can ask me your doubts. Otherwise, in the next class, we will start discussing about the basic terminologies that we use in accounts, like the meaning of the asset, the capital, the liability, receipt, and expenditure, all these things one by one. So in the next class, the point of discussion will be asset, and few other topics will also be discussed in the next class. See, other than asset, we will also talk about the meaning of the liability, and after liability, we might discuss the meaning of the capital also in the next class. So this is it for the today's session, Labiba and Zainab. I hope both of you understood the concept of the accounting. If you have
Yes,
any
sir.
doubt, please let me know. Otherwise, we will continue the session from this point onward in the next class. Zainab and Labiba, any doubts?
Yes, sir. We are clear.
Everything is clear. Okay.
No, sir, it's clear.
All right.
Yes.
Thank you so much. So this is it for the today's session. You can now log out the session. We'll see you in the next session. Thank you so much for attending the
Thank you,
class.
sir.
Goodbye. Take care. Allah Hafiz.
Thank you, sir. Allah Hafiz.
Hello. Good evening. Saf, are you there? Saf, am I audible to you? Okay. You can't unmute yourself. All right. Okay. So Saf, I think you were already there in the regular batch, na? Uh, when we have started our account session at 8 to 9. I think you were there with the other students. Huh? Yeah, yeah. You require permission to unmute. I think I haven't put any restrictions from my side. Let me just check. Give me a moment. Okay, so you were saying that he was lacking basics and you stopped making. You want to teach from the basics. All right. All right. So you basically want me to start from the very beginning. Or Are you? Can you just tell me? I think there's some problem with your mic. Unless and until you open your mic, you won't be able to communicate in a proper way. So it would be better if you try to unmute yourself. Since there is no restriction from my side, I think there's some problem from your from your end. Please check once your mic connection.
Hello, sir.
Yes, sir. Okay.
Can you hear me, sir? Now?
Yeah. You are audible now. Yeah.
Okay.
What were you saying? Sorry.
So can you start like from basics, if it's possible? Like I have exams like from next month. I think from ending of September or starting of October.
Okay. So could you
Yeah.
just tell me your syllabus for the exam so that accordingly we can start, na?
1 month. Sir. Mm,
How many chapters are coming in your exams?
So 5 chapters, I guess. Five or
Five
six.
chapters are there, and all those chapters are from the partnership or from the company accounts or from any other book. So we
Five are
have.
from partnership fundamentals, admission of partner, senior
Mhm,
profit sharing ratio, retirement,
mhm,
and
mhm,
dissolution of firm. Then there's one more part B, analysis of
mhm.
financial statements. Yes.
Okay. So just wanted to know, is there admission of the partner as well in your syllabus?
Yes, sir. Admission of partner.
Admission of partner is also there, na?
Yes, sir. I can send you on WhatsApp if you want.
Yeah, sure. Please share the syllabus on my WhatsApp if it's possible.
Okay, sir.
All right. So let's do one thing. Why not? Let's start with the admission of partner. Admission of
As
partner
you,
is an sorry.
yes, sir. Yes, sir. Continue.
Yeah, admission of partner is an easy topic. Let's start with the admission of partner. If you face any difficulty understanding the admission of partner, we will then get back to the